What's up YouTube, it's Louis here bringing you today's cryptocurrency video. We're going to take a look at Matic or Polygon. So what I said in the last video, of course we started on the monthly time frame because we want to look at the most accurate time frames. I think what I said was this current candle, and of course it's a current candle, and which I said in the last video anyway, so we can't make a judgment on it. However, in the last video I think it looked like a shooting star. And that candlestick pattern is a bearish candlestick. So if it had closed like that, which it still can, of course, it's not looking like that anymore at the moment. It's actually looking very nice, because if we were to close the month like this, it would be the highest the highest close basically that Matic has ever had on the monthly time frame. But it wouldn't be a higher high over the wicks, but it would be on the closes. But what I was saying is that it did look like a shooting star at that moment. Of course, 14 days left, anything can happen. But at that moment, if it had closed as is, as a shooting star, you probably would have rolled over down to here again, basically. And if you were to lose that, potentially you want to hold above $1, basically, which was in the last video. So I am liking the look of it at the moment because, of course, close like that, we're bullish again. Look at that on the weekly time frame. You've rolled over at the start of the week, you open here, rolled all the way down to this 12 weekly EMA, had a very nice bounce. And if you were to close the weekly, which we are going to do tomorrow, at the end of tomorrow, if we close off like this, again, this would be the highest weekly candle for Matic's history, you know what I mean? And so this would actually be a bullish hammer, bullish continuation pattern. You see, in a downtrend, it doesn't work, basically. A lot of bullish patterns or bullish candlestick patterns, they don't work in a downtrend. They might work in the short term or not at all, and we didn't see any sort of run up. You did have a wick, so you actually did come up during the week before rolling over, because you're in a downtrend. It worked in the short term. So if you do see at the bottom of a trend, at support basically, over here we had one. This is the same candlestick pattern as this, it's just got larger bodies. This actually took you back up basically. So this is what I like. You see here again on the 12 EMA, just like it is now. Some people might say this is a spinning top because it's got wicks to the upside. This pushed you up, and here again at support pushed you up. We're seeing that right now at support. Obviously the wicks are down there, but the body's a bit higher, but I would say that this is now bounced off support, and if it closes tomorrow at midnight like this, it would be a bullish hammer, of course, with the highest ever weekly candle close. So I'm going to take a look at the daily time frame now. I'm going to look at the chart with the drawings now, and looking at of course the moving averages as well. I'm going to actually take off the 12 moving average. You can see no bearish cross here, so even when you lost it, no bearish cross. It just came down to the 55 and nicely met that. So I'm just going to get that off, and we'll look over here again. So what I do like is, of course, you've bounced off the 0.618, which is measuring from the swing low to the swing high. When we're looking for an area it's going to come to and bounce off, we're trying to measure an impulsive wave. So this is your impulse, like this. This is your impulse, and right now we're having a correction, and if we can confirm this as support, we will have continuation basically. And some nice compliments is if the monthly closes as is, and the weekly, because the weekly is a strong bullish hammer basically, showing you that the bears were in power and the bulls basically came into power, because it pushed the bears. So the bears brought it down to here, which actually lost this rising wedge. So we are still in a rising wedge. It can still come down, of course, until while you're in it, you're in a bearish pattern. So if you were to break to the upside, which not a lot of the time it does, but if you were to, that's very bullish signs, because you've actually now broken upwards out of a bearish pattern. So basically, technically speaking, if you're still in the pattern, you're technically still going to roll over and break out of it. If you can break that resistance point up here, and it is ascending, so I can't give it to you, but if you can break above this, you invalidate that further downside. And we'll go to through a bit more detail on this, basically looking at the Fibonacci's to see is there still a potential of rolling over and whatnot. But let's say you were to fall out of this, lose this 0.618, which is currently your support of the trend line there. If you were to, you're going to create a reversal wave to the 1, which would actually be your first technical target, because it's the first low. When you're in a rising wedge and you lose it, you retrace to every low basically. So this would be actually your first technical target, and the next one would be this area. So the 141 to the 1618, that would be your next technical target. And worst case scenario, if you were to even lose that, which you don't have to, from here you can bounce up like that. But if you were to roll over there and lose $1, then you could be coming down to here, the 2 to the 2414, this zone. But I'm not seeing that at all, guys, until you start breaking out of here, come down to this target, lose that, come to this target, lose that, come to this target. But again, we're not seeing that until you see this breakout, which we haven't got. We've got an amazing bounce. So let's go back to the daily time frame. So from the swing low to the swing high, you've come to that 0.618. Well, it's high potential that if you did lose that, that's when you get that rollover to the one, where look where 200 daily EMA is. So that's basically saying if you did come down, you potentially could get a bounce. That bounce would have to get back above this to invalidate further downside. You could come up and get rejected, or come all the way up there and get rejected, and then you'd see that further rollover basically. But we didn't lose the support. You've held three significant key levels. First, the 618. Second, the rising wedges support, and third, the 55 daily EMA basically. So it's actually very positive that you've done that. Now, we're not completely out of the woods yet. There are some levels that I do want to see broken. So we are now, after we get impulse basically, and then with this impulse, you're trying to find the correction where it's going to correct to, and it's corrected to that 0.618. And you can see now we're starting the continuation phase basically. So it's an impulse, correction, and then continuation. We are now in the continuation phase, and with that continuation phase, you bounced off the 55, got above the 20, and you back tested that 20 as support with a bullish spinning top, because you've got slight wicks to the upside, so I'd say that's a spinning top. If you get the bullish hammer and the spinning top bit muddled up, that's fine. One over here, I would say this is a bullish hammer because it's got less wicks to the upside, but why? Because it literally looks like Thor's hammer basically. So that's how I know it's a bullish hammer. If it's got a bit more wicks at the upside, I'd say it's a spinning top, literally like a spinning top, like the toy, the spinning top. So I'm seeing that now at support. So we were below support, back tested that 0.50. So look, you're working way up. You bounced off this, now you're bouncing off this, and we're now bouncing off the 382. So you're holding the major key levels of support, which I really do like. My voice broke. So as long as we're above this 20 EMA and not forming a bearish cross, we're still in an uptrend. So you can see here when they came very close to the 20 and the 55, you did not form a bearish cross, and so this is called an EMA slingshot. You literally, EMA repel, which gives you a slingshot action basically. They repelled, they did not cross over, and you got a slingshot action. So the same here, they repelled, you got back above them, confirm their support, and so we should get a nice pump to the upside. And I'll give you a technical target to the upside because we have given you the bearish targets. Let's look at the bullish case. So we're not out of the woods yet, as I said. There is a key level that I need to see broken to get excited basically. So I'm going to put on the fibs. You can see we have the swing low to the swing high. How do we know? Because it's the correction phase done, and we're now in the continuation phase basically. So that's how I know we're starting to go up. And so if we can now get above this 0.618 and confirm that as support, we need to see it confirm as support. So something like this, where you come back to the 0.618. If we can, you got a minimal target at the 1, which you can see is actually above the rising wedge resistance, which is then when, if you can confirm that as support, you invalidate further downside. So after you confirm that support, you do have a technical target out of the 1.618, and that's a beautiful target, guys. $3.33. Oh my gosh, that'd be a beautiful new all-time high for Polygon Matic. But again, guys, once you meet that technical target, we must see the outside of this hold, because if you fall back into this and confirm it as resistance, you're basically still in the rising wedge. And as I said, we're not out of the woods yet, because while you're still in this, you're in a bearish pattern. So technically speaking, we could see that rollover like this and then continuation, because that is how the Fibonacci's are used, correct? You have an impulse, correction, continuation. That would be a technical target minimum. So we need to understand this. And actually, this over here, if we fail to break above this zone, this would cause a dead cat bounce on the short term. In the short term, let's show you what a dead cat bounce is, if I have that already. Yeah, so a dead cat bounce will form at the top of an uptrend. Price will dip like this and then start retracing back to the 0.50. So I'm actually going to add here to the 0.50 and the 0.618. I've written it here, but not here. So before dropping and then continuing the new downtrend, if price got above that 0.618, it would reverse back to an uptrend, because you've come down, dipped, and we started correcting. This is exactly, what we're seeing here is exactly how the fibs are used. You've come down impulsively and you start correcting before your continuation. That is how the fibs are used. But if you can get above that 0.618, that is when you create that reversal wave, and you would have targets above this one at the 1.272, the 141, and the 1.618. So I hope you understood that what that dead cat bounce is. And so until you basically break above this and confirm that support, we're not completely out the woods yet. So it's a must to close above $2.22 and confirm that support. If you do roll over here, yes, of course, that's potentially creating the dead cat bounce scenario like this. Oh, sorry, to the 200 EMA. But if you actually to roll over again and confirm that 382 as support, or even come down to this 55, as long as you're above these two EMAs, I'm looking for continuation basically. Even if you were to roll over like this, you could be creating a double bottom like that. Come back to the pink trend line, break it, then back test it as support, then we would be off like that. There's all potential scenarios. As long as we're not forming the bearish cross, I'm not seeing us go down to the 200. If we form the bearish cross over here with these two, then I would expect the 200 EMA to come into to hold basically, and that would basically form that dead cat bounce. How the fibs should be used basically. So I hope you understood this video today. That'll be it. Potentially, just before we go, potentially having some sort of a inverse head and shoulders over here. One shoulder, head, second shoulder. So you could technically say that if we were to break this point over here, could have a nice wave back up to the 1, which we've gone through already today, because that'll be a minimal target if you were to hold that 0.618 as support. So yeah, that will be it for today. I hope you enjoyed that video. I enjoyed making it, so hope you did. Please share this with everyone if you can. You don't have to, but that'd be much appreciated. Leave comments down below, your agreements, your disagreements. I don't mind the hate. It's still giving me views. But yeah, I hope you enjoyed it. I'll catch you in the next one, and as always, peace.